Hey, what's up, my friend? Welcome, right, to the final video of 2016. Okay, so I've actually looked back my YouTube account and I realized that this video right now is the 58th video I've done for 2016. And if you ask me, I spent an average of about an hour each time I produce a video. So that's about 58 hours of video production this year, right? And I will say the most difficult part about producing video is usually the part where I do this introduction, because there are times where I just fumble, my words get misplaced, and I have to reset everything again. So that's for me the most difficult part of producing a video. That's something that I just want to share with you. Okay, so if you are someone who has never tried to produce a video, right, and you go and start it, right, you will realize that this is something that you would probably face. Even now, up to date, right, doing this intro right now, I still do fumble from time to time. Okay, so that's a little trivia fun fact for you. So anyway, back to today's weekly market analysis, right? I want to talk about a couple of trading setups I'm looking at this week. All right, one is dollar Canadian and two commodity pairs. All right, and towards the end of this video, I'm going to share with you something which I find that is really, really important. Right, I want to so-called shift your mindset. Instead of focusing on the results, I want you to focus on the process. Right, because if you were to focus on the process, it greatly increases your odds of being a profitable trader. So I want to talk about results versus process. Right, this is the two things that I want to talk about towards the end of today's video. Okay, so since this is the final video, right, let's begin. Okay, so the first market I want to talk about is dollar Canadian, right? If you've been following me for a while now, you know that I'm actually bullish on this pair, right? If you look at the weekly, right, the overall trend is towards the upside, right? You have a series of higher lows, higher lows, higher lows. Then we have this steep pullback over here, and then price is pretty much in this channel, if you call it. All right, so on the daily time frame, you can see the price action much more clearly, right? And if you have been following, you know that this was a level that I mentioned that I would be interested to do business from, right? This area of support with confluence of this upward channel or trend line, if you call it. So number one, we have the trend, right? Check. Number two, we have the area of value, right? Trading from support and this upward channel trend line. Check. The third thing we are looking for is just the entry trigger. Do we have it? So basically what happened is that on the it was on FOMC night or day, depending where you're in the world, right? This was the candle that would give you a trigger to go long on this trading on this currency pair, right? The question is, are you long or am I long, right? And the honest truth is, I am not long, right? I could simply say, oh yes, I'm long, right? My prediction came true, blah blah blah. But the honest truth is that I am not long on this particular market, even though I've been following it extensively. And why is that? Is the reason is because the stop loss was something that I am not prepared to take, because the stop loss is pretty large, if you ask me, right? The market has closed over here, and if you were to enter long, right, say you manage to get at the open on the next day, right, your stop loss is from here and possibly all the way down to maybe say somewhere here, right? Because say you give some buffer from this low over here, right? So say let's put your stop loss over here. So this is a pretty large stop loss, if you ask me, right? And I'm not comfortable swallowing this type of stop loss. And the reason is simple, because from a risk to reward perspective, right, if you have a larger stop loss, you need to have a smaller position size, right? Because I keep my risk constant 1% throughout my trades. So a larger stop loss lead to a smaller position size. So this means that the market has to move this much in my favor before I get a 1-to-1 risk to reward. Are you with me? So because of your stop loss, because it's larger, you need a longer distance for the market to move in your favor before you can achieve a 1-to-1 risk to reward. And needless to say, if you have a tighter stop loss, the market just needs to move a smaller distance to accomplish a 1-to-1 risk to reward. So needless to say, right, if you can have a tighter stop loss that is still justified based on the structure of the markets, right, you have a tighter stop loss because, right, you don't have a tighter stop loss because you want to have a tight stop loss. You want to have a tight stop loss because the structure of the market justifies it. Okay, so in this instance, the stop loss is too large, and I am not in this trade. So what I've decided to do instead is to go long if the market can pull back, right, giving me a tighter stop loss. So let's say, for example, the market does pull back, right, say for example somewhere around this level, 132, right, I can go long over here and my stop loss is now still at the same level. So right now you can see my stop loss is much tighter, okay, compared to earlier if I were to, just entering on the open of the next candle, right? The downside to this approach is that you may potentially miss this trade. So you have to accept this fact that you may potentially miss this trade if you are, adopting this approach. But the upside to this is you will get a better risk to reward. Okay, so this is something that, I want to share with you, right? And whether it suits you, right, I leave it to you, right? But this is an approach that I'm adopting right now for this dollar Canadian currency pair. All right, so with that, right, let's move on, right? Next pair is New Zealand dollar. So New Zealand dollar, let's look at the big picture. You can see that pretty much the long-term trend, I would say, is somewhat, undecided, right? Because you have this this lower highs, right? Lower highs. Then this, if you draw a trend line, it got broken and the market, formed this a new so-called trend, or rather upward channel. Okay, so right now I believe, let me try if I can draw some channel lines like the dollar Canadian, because it seems possible. Yep, somewhat looks like it. Right, so the way I draw these lines, right, is just like support, resistance, right? I like to have as many touches as possible. So what a lot of traders would do is, here and here they touch it. I wouldn't say it's wrong, but my preference is again to get as many touches. So I could, shift it up a little bit. 1 touch here, 2, 3, right? So right now price seems to have, broken this this upward trend line. Okay, but I wouldn't really be, too interested to short yet, because if you look at the daily, okay, you notice that the market has closed into this area of support over here. Okay, it has closed below it. Okay, so this signals that, the bears are currently in control. But since we are dealing at this, significant level of support, what could possibly happen is the market does a false break and then it closes higher. That is a possible scenario as well. So you may want to pay attention to this. Okay, if there's a false break that occurs, right, where the market tries to push lower but couldn't, and then it closed above support, right, this to me is a sign that it could possibly, push back higher and retest these highs over here. So for me right now, right, if this happens, I'll be interested to go long on this New Zealand dollar. And if you are short the New Zealand dollar, right, if this specific pattern occur, and if you are, say, a swing trader, this I would say is a very legitimate reason for you to exit your swing trade on this New Zealand dollar if you are short. Okay, New Zealand dollar, something to pay attention to. And just 2 more markets, right? Let's talk a little bit more towards the commodities, right? So this is the chart of copper, right? We have this massive, crazy bullish move over here, right? Over the last couple of months, this one over here. So at this point in time, right, traders are going to look at this chart and say, oh, Rainer, the market is, is so high already, right? It can't go any higher, right? Why not maybe I take a short stop loss above this high, and maybe we can, see a retest back of, maybe this previous resistance turn support. And, I won't say you're wrong, right? But for me personally, I prefer to trade with the trend, right? And one thing that is important is to see where you are in the big picture, right? It is always important to see where you are in the big picture. And how can you see where is the big picture is by going to the higher time frame. So if you're on a daily, right, you can just go on to the weekly time frame and see where you are. And if you notice the weekly time frame, you zoom out a little, right? Over the last few years, right, we basically, have this a downtrend over here, right? Series of lower highs, lower lows, or blah. And if you notice recently, right, this trend could potentially, I can't confirm that it's ended already, but it could be possible because this highs over here was taken out by this move over here. Okay, so this could be a start of a new a bull market if you put it across. So I am bullish on this copper, right? If you look at a daily, right, the level that I'm interested to do business is at this one over here, right? Number 1, we have the trend. Number 2, the area of value. This is pretty. This will be an area of value to take note of. And number 3, just wait for is the entry trigger to go long, right? So there are, different entry trigger. You can trade the false break. You can trade, for example, engulfing pin bar. type of candlestick patterns. You can, maybe go to a lower time frame and look for example, a break of structure. So there are different types of entry trigger, and there really isn't a best entry trigger if you ask me, right? I would say what is more important is the trend and the area of value, and the entry trigger is just simply a reason to tell you that the time is right, the time is okay to go in right now, right? But before you even look at any trigger, you want to look at the trend and the area of value. Okay, so this is the level I'm looking at on copper, right? If you can come in lower, right? Maybe do a false break where closes lower and then pump, it closes higher, right? So say this is a bearish candle and then it closes higher. I'll be interested to go long if this type of false break setup occurs. Okay, so this is for copper. And last but not least, right, just want to talk about this market, corn, right? This is a market that again I'm interested in, right? If you look at corn, you look at the big picture, it doesn't look pretty at all, right? This is a weekly time frame. You can see that it pretty much is somewhat in the range over here over the last a couple of years, and previously it was in this downtrend over here. And the thing about this is that when I look at the daily time frame, now the weekly time frame is no doubt right towards the downside. Okay, the trend is still, I would say, is towards the downside. But on a daily, things are looking somewhat interesting, right? Because if you notice, right, it has basically formed this inverse head and shoulders pattern, right? The market broke out of it and then it's in this range over here. So for me, right, I'm actually interested to long on a breakout, right? This is not really a trend trading type of setup, but it's more of a breakout setup, right? In anticipation that the trend could potentially end, right? Of course, I don't just pick tops and bottoms. I want the market to actually confirm my bias by showing me the price action that I'm looking for. So right now, what I'm seeing is another potential head and shoulders. Right, so you can see over here, head and this right shoulder over here. So what happens is that if the market can just consolidate another 1-2 more candles, I'll be inclined to trade the break above this highs over here. Okay, if it does trade higher, trade above the break of this highs in anticipation of higher prices. Okay, because if you look at this price action structure, what is it telling you? Right, if you look at this inverse head and shoulders, it's telling you that the bears have difficulty pushing price lower. Right, it pushed price lower over here. The bulls came into control and the bears, try to, push price lower, right? Selling pressure came in, but it just couldn't, push it far enough to even retest back this lows. So what this is telling you that is either the sellers are getting weak or the buyers are stepping in to come in to push price higher because they find that the prices are low. It's an area of value and they decide, it's a good time to buy. So you rallied up higher and right now it's pretty much, in this range or in this forming another inverse head and shoulders pattern once again. So the story is once again similar. The bears, they try to push price lower, right? Well, they did, right? But could even retest back this lows or even this lows. Then the bulls come in, push price higher. The bears step in once again. The sellers couldn't retest back this lows. Then the bulls come in, and right now they're hovering near this area of resistance, right? So I'm sure there will be traders right now who are looking to short this market or are short this market. Right, and if you're short, my guess is your stop loss will be above this high. Okay, so if I were to go long on a breakout, right, and it hit your stops, right, your stops are essentially buy stop orders, right? So meaning you will exit your trade by hitting the by going long, right? Because if you're short, right, you need to go long to exit your short. So they will go long, right, at this highs over here and fuel further buying pressure. So that could be one possibility, and I'm looking to long corn if that could, trigger above the highs over here. Okay, stop loss is pretty easy, right? I'll just have my stop loss somewhere about here, right? Give it some buffer from this low because I don't want to, just let price come down, spike me out, and then continue higher. So usually I give it some buffer away from the highs and lows in the market. Okay, so this is for corn, definitely a market to look out for. And if you recall, soybean is another one that I mentioned again last week, right? The trade didn't occur yet, but this is another potential breakout that could happen. So that's all for the trades that I want to cover in this week's video. Okay, and if you, as I've said earlier, right, this will be the final weekly market analysis for the year because towards the year end, the market tends to be a little quiet, and I prefer to just take a break in the last week of December and the first week of January. But that doesn't mean no market analysis. I'm not really doing anything because I'm actually preparing something special, a special event in January. So I'm just doing some work at the back end on my side. Okay, so since this is the final video of the year, I just want to do something. Talk a little bit more about process versus results. Okay? Because this is important, right? And it doesn't really just apply to trading, right? It applies to, athlete, right? Olympics. Same thing as well. Because imagine this, right? A lot of times, traders, they keep focusing on their results. Like, for example, whether is this a win, is it a loss, and they will get affected by their wins and loss. But you have to understand that you can't control your results in trading. Right? Let me repeat this once more. You cannot control your results, or rather the outcome of your trades. That is not possible because you are not dealing with mathematics where 1 plus 1 equals 2. Right? This is not your world. This is not the reality of you as a trader, or rather the reality of trading. This is not the reality of trading, right? It is not linear. Rather, the reality of trading goes something like this. 1 plus 1 may be equal, say 30%, the answer may be 2. And 70% of the time, right, the answer could be, say, 3. So this is the reality of trading. You're basically dealing with probabilities, right? Where you will not definitely get the answer as 2, but sometimes it could be 2, sometimes it could be 3. Okay? So you don't really want to focus on the results, right? Because like I've said, you can't control the outcome. So what should you focus on? You should focus on the process. Okay? So let me explain. So let's imagine this, right? You are, say you are a weightlifter, a competitive weightlifter who take part in the Olympic. Okay? Of course, needless to say, right, to get gold, you need to, lift the heaviest amount of weight. Right? But the thing is, you can't tell yourself, say, I want to get gold at the Olympics. Right? You can't tell yourself, I only want to focus on getting gold. Because if that is what you do, just focus on getting gold by visualizing, by, by imagining that, you're going to get gold, I can assure you that is not going to happen. Instead, if you want to get gold, you should focus on the process of getting gold in the Olympics. You have to focus on the process of getting a gold medal in the Olympics. So what is this process? Well, there are a lot to think about, right? Your diet, right? Your training session, let's say your sleep, your discipline, and etc. Right? And if you do this consistently, day in, day out, after 4 years, will you get a gold medal? Will you? Well, the answer is you don't know. You don't know. Right? There is no guarantee that, working day in, day out, working your butt off, right, that you will definitely get a gold medal. There is no guarantee. Right? Like I said, you can't control the outcome. But, big but here over here. But if you do this day in and day out, you will increase your odds of achieving a gold medal. No guarantee, but you will achieve the odds of getting a gold medal. Okay? So this is the same as trading, right? You want to focus on the process, right? You don't want to focus on whether each trade is a winner or loser. You want to focus on the process. So what is the process? Well, risk management, right? Having a trading plan, having the discipline, right, to follow your plan, and etc. And if you do this day in and day out, will you be a consistently profitable trader? Well, there is no guarantee, right? Because sometimes your plan may be flawed and etc. But if you do this consistently, right, you do your homework, you do your review, there is a good chance you will increase the odds of you actually being a consistently profitable trader. Compared to someone who just focuses on the results. Oh, this is a win. This is a loss, right? Those are not going to teach you anything, right? You will not know why you're winning. You will not know why you're losing. You will not know how you are supposed to improve as a trader, right? But if you focus on the process, right, in the process, there are a few things to take note of, right? Your risk management, your trading plan, your discipline, your trade review and stuff like that, okay? You will increase your odds of being a consistently profitable trader. Alright, so if right now you are focusing, you find yourself focusing too much on your individual trade result, then I want you to take a step back and look at the big picture. Okay, think of the Olympic athlete, right, who focus on the essential stuff day in and day out, their diet, their sleep and everything. And in the long run, alright, there is a greater likelihood of them, winning a medal compared to another athlete who just, sit down, relax, visualize, and then do nothing about it. Okay? You want to be focusing on the process. So this is a point that I want to bring across. Okay, do not focus on the results. Your results are random. You're dealing with probabilities. You're dealing with statistics, right? You can have an edge in the markets, but you may have the next 2 or 3 losing trade. That is possible as well. So a better way to look at yourself, your trading, is by focusing on the process. Right? You want to ask yourself, do I have a process that works? Do I have a process that I follow, that I know that if, in the long run, if I do it, right, there's a greater likelihood of me being a consistently profitable trader? Right? And your process can still tell you, where you can improve on in your trading. Okay? So I think this is really key over here, right? Trading is not a get rich quick scheme. It's not the easiest thing, to be honest, right? There's really a lot of work at the back end to do, right? Where a lot of things that, marketing gurus will not show you because it is bad for business. But I can tell you, right, there is a lot of work to be done, right? As I've mentioned over here, your risk management, your trading plan, your discipline. I have not even include your recording and trade journaling. Okay, your weekend, for example, weekend review or weekend, doing your homework to actually see which are the potential trading setups for the week. So there are, a lot of things involved over here, right? Which I call the process. And this is important, my friend. Okay, so, if this year hasn't been too good, right, don't worry, right? There's always, it's never too late to improve. Okay, so think about this. Think about focusing on the process. Do not focus on the results because, it will lead you further and further away from reaching your goals. Okay, so this is what I'm trying to bring across, focusing on the process and not the results. Okay, so with that, right, I've come to the end of this week's video, right? I wish you, a great year ahead. Merry Christmas and a Happy New Year. And if this is a video that you're enjoying right now, feel free to hit the like and subscribe button so I know that, this is something that, it resonates with you and you're enjoying it. Okay? So with that, talk to you soon.